Hi friends, welcome to a brand new segment of Invest Talks, Friday Basics, which will give you good insight about Indian equity market. My sincere effort in this segment is to create awareness to all in simple language. This series will be arranged in such a way so as to understand everyone who are beginners. Please share this video to all those who wish to learn, understand and participate in stock market. Please don't forget to subscribe and click the bell button to get the notifications of upcoming knowledge-packed videos on personal finance and stock market. Welcome back to Finvest Talks, where we make everyone understand the basics of money management. Before going into this video, make sure you watch earlier videos of this series, which is mentioned in the I button. Hi friends, welcome back to Finvest Talks, investment for a better tomorrow. In our last video, we discussed about what is a stock, what is a stock market, how it works with a simple example, and who are the major participants in a stock market. In today's video, we will see how practically the stock market works, how the stock price moves, and also an important pro tip for beginners to follow in stock market. So stay tuned till the end. Let's start with the basics. What is a stock? Stock is one of the most common investment one can make with minimum investment, and it can be bought from the stock market. Stock market is the place where one can buy or sell a stock of the company. Buying stock means you are buying a small part or small portion of the company. Thereby, you will get partial ownership of the company. Why you want to invest in stock market? The main two ways of making money in stock market are: one is to buy low and sell high. Buying low when the price is low, and when the stock appreciate, sell at high price. And second is by earning dividend. So what is a dividend? A dividend is the distribution of some of its company's profit to all its shareholders as determined by the company. Now let's understand how stock market works with a real-time example. Mr. X having a company named ABC. The current value of the business is say 50 lakh rupees. He wished to expand the business. For that he need a capital of say 40 lakh rupees. So Mr. X will issue 4 lakh shares with 10 rupees each to the public. By this process, Mr. X will generate 40 lakh rupees from 4 lakh shares that he distributed among the public. The public will keep the shares with them, and as the company grows, the stock price will also start appreciating. This is one way of making money in stock market. One more way for making money in stock market is by getting dividends. When the company earns huge profit, based on management decision, if they decide to declare dividend is another way of income generation for stockholders. This process of issuing shares to the public for the first time is called IPO, initial public offering, and subsequent listing is called FPO, follow-on public offer. We will see more about IPO in our upcoming videos. Once listed, these companies will have various stakeholders holding different percentage of shares. This is called shareholding pattern. Shareholding pattern reveals the distribution pattern of the company equity shares to the public and promoters. It will show the equity distribution to various bodies like FII, promoters, banks, insurance companies, financial institutions, mutual funds, retailers, etc. FII, foreign institutional investors, or FPI, foreign portfolio investors, refers to the investors from other countries putting money in Indian stock exchange. Whereas DII, domestic institutional investors, comprise of local mutual fund, insurance companies, local pension funds, and banking and financial institutions. Now let's take the shareholding pattern of a particular company. For any company, the maximum shares will be holding by the promoters. They are the people who are running the particular business. Let's see an example. Let's assume the shareholding pattern of company ABC is listed here. The total promoters holding is around 50.28%, whereas mutual fund holds 5.37%. DIIs is the domestic institutional investors hold 13.47%, whereas FII, foreign institutional investors, hold 24.73%. Other parties, which includes retailers, holds 11.5%. As we know, the total shares issued by company ABC is 4 lakh shares. So the total promoter holding is around 2 lakh shares, whereas mutual fund holds 21,480 shares. DII, domestic institutional investors, hold 53,880 shares, whereas FII holds 98,920 shares. Other parties, which include retailers, holds 46,000 shares. In this case, the total holding of institutional investors, that is FII plus DII, is more than 38%, whereas mutual fund holds 5%, which shows good confidence by the investors on this company, which in turn shows it is a good company. This is to give a fair idea about how a company's shareholding pattern look like. Now let's see how the stock price moves. The fundamental answer is the stock price change primarily due to market force of supply and demand. The supply and demand determines the price of a share. If the demand of stock goes up, the price also will automatically goes up. Similarly, if the demand comes down, the price will automatically come down. It is like a giant auction. Let us understand this using a simple story. Let's assume the share price of a company ABC is say 100 rupees. Person X is having a plan to buy the stock of ABC as he know the company is going to grow in future. Similarly, the other person, say Mr. Y, wish to sell the same stock of ABC as he feel the company will degrow in near future due to some reasons. As both are entering into a trade, Mr. Y is ready to sell his stock at a premium of 5 rupees, say 105 rupees. And Mr. X is ready to buy the same stock at a discount of 5 rupees, say 95 rupees. The trade will not execute as both are not in an agreement of a single price. To execute the trade, one has to compromise his price. That's why stock market is called a giant auction center wherein the stock price will decide based on supply and demand. The negotiation will start between Mr. X and Mr. Y, that is between buyer and seller, and finally they have to come to a common price. Assume in this case they agreed for a common price of 101 rupees. That means Mr. Y will be able to sell his stock at a premium of 1 rupees, whereas Mr. X will be ready to buy the stock at a higher price of 101 rupees, as he is having more confidence about the growth of the company in near future. So finally the trade will execute at 101 rupees and the price of the stock will change from 100 rupees to 101 rupees. This is how price of stock changes. All this negotiation will happen in a fraction of a second as the number of buyers and sellers are in huge quantity, say in lakhs, and will execute electronically without any human intervention. This is how quickly stock price fluctuates. The market depth shows the number of orders pending with buyers and sellers. Once they mutually agreed for a common price, the trade will execute immediately. Hope you got a fair idea about how the stock price moves, and also you will get more clarity of how stock market works once you follow the upcoming videos. I am carefully arranging the content in a systematic way so that a beginner can learn the stock market systematically and in an effective manner. For beginners, my PROTIP is to give importance to learning than to jump for initial trading. As you progress, you will feel more confident and slowly you can start your investments. I will definitely help you for that. Don't forget to prepare notes while you learn, as this will help you in your future. In my next video, we will see more about what is a BSE, what is a NSE, what is a market cap and various index available and its purpose. And also we will look into different sectors. In the upcoming videos, we will see who is a broker and what are the different types of brokers available and which one is good for our investment. Also, we will look into fundamental analysis and technical analysis and what is the difference between fundamental analysis and technical analysis. What are the various jargons used in stock market and much more. So stay tuned for further videos. Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy. Thanks for watching and have a good day.